Good day, ladies and gentlemen, and welcome to the Delta Report on this Monday, September 19th, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, it would be good for you, probably, if you listen to what I got to say on here, because this is going to be important today. And the subject matter is not exactly what you'd expect. I'm going to talk about gold and silver. I'm going to talk about cryptocurrencies and their place in the new monetary system, and why this is so important for you to listen to what's going to happen. I say going to happen because at this point it's almost inevitable. You see, the Fed embarked on a massive printing from 2008 right up until nearly the present, and they really increased it after we experienced the COVID pandemic. Really exponentially they increased. The monetary supply was increased tremendously. This is what's caused this inflation. Now they've embarked on this policy of trying to curtail inflation or fight inflation. Things aren't working so well for them. And so, what's going to happen in the future? And it's very, very difficult to explain this, but there's going to be a Fed pivot. We're either going to have a Fed pivot or the system is going to totally crack apart, because it will not withstand this deflationary pressure that the Fed's putting on it for much longer. Them raising interest rates is a no-go. Ultimately, they can't continue with this for very much longer. They can't continue with quantitative tightening for a whole lot longer. So what's going to happen is the system's going to start to suddenly snap back in the other direction. I've been calling for something like a 2008 event for a while now. And then the Fed's going to pivot. You've all heard about the Fed pivot. Well, what does that actually mean? It means the Fed going back to more accommodative monetary policy. It means them possibly doing even fiscal stimulus again, along with monetary stimulus. It means moving back to quantitative easing instead of quantitative tightening. It means that the Fed is basically, they've told you they're data dependent. It means that when the data turns really bad, and it's going to, we're on the verge of that happening, that the Fed's going to return to easy monetary policy. Well, we're already seeing them having very much difficulty hanging on to silver in the COMEX and the the London Bullion Exchange. They've been dropping. The numbers have been dropping. I've been keeping a careful eye on it. They had somewhere in the vicinity of 1,100,000,000 ounces in the London Bullion Exchange a little while ago, and it's dropped down to 1,000,000,000 ounces, and then it dropped down to 900 million, and it's continuing to drop rather quickly. There's no reason to believe it won't continue to drop in the next coming months. Silver. Gold is going to be problematic too. Not as bad as silver, but it's going to be problematic getting a hold of it in the real physical form. There's going to be shortages coming up, gold and silver. And this is after the Fed changes monetary policy. There's going to be a loss of confidence in the purchasing power of the dollar. That's what's going to happen. And all of the other fiat currencies of the West as well. And so ultimately, where does that lead? It leads to a panic of people trying to find safe haven assets after the Fed changes monetary policy. Not now. Now listen to me straight what I'm saying. Not now. Now's too early. Right now, there's a movement into the dollar. The milkshake theory's happening right now. Right now. And if you don't know what that is, that's the dollar, people being a shortage or a shortage of liquidity, and people moving into the dollar as a means of exchange because they see it as the best horse in the glue factory, basically, or the best of the fiat currencies. The fiat currency that's retaining its value the best. And it's because of this Fed tightening policy that's going on right now. But that's going to come to a stop. So what I'm talking about is not now. What I'm talking about is future. I'm not talking about now. You guys out there say, well, gold and silver are not a good investment, blah, blah, blah. Yeah, but because there's 4 bullion banks that are manipulating the price to the downside. Along with the Fed's tight monetary policies and are rushing into the dollar. I'm looking into the future after the Fed pivots. And that's what we're talking about on this show, is after the Fed pivots. After the Fed goes back to easy monetary policy. We're going to see, because of the loss of faith in the purchasing power of the dollar, we're going to see a mad rush into gold and silver. And it's going to disappear. In physical form, there's going to be such big players that are going to come into the game that, especially silver, it's going to disappear. You won't be able to buy investment grade silver. They're going to make way for industrial silver at the expense of you guys. And the only way you're going to be able to buy it is if somebody has some already. You're not going to be able to just go to a place like AppMax or any of these other online silver bullion and gold bullion dealers and buy. They're going to run out of inventory. You'd have to buy from somebody who's holding it. And the price is going to go exorbitantly high, and the people that are holding it are not going to want to sell, and I'm going to explain to you why. It's very simple. The people that have the gold and silver are going to look at the dollar and the explosive amount of inflation. And what we're talking about here is the dollar losing half of its purchasing power each month. That's what we're talking. That's what hyperinflation is. And so the people who are invested in dollars and are looking to get out, and there's going to be a tremendous amount of them. There's going to be, just in the United States alone, there's some odd $20 trillion in savings and stuff in the banking system. That starts to move. It chase goods and services. This is what happens when people lose faith. It's a loss of confidence in the purchasing power. And they're going to move in. First thing they're going to head toward, and the first thing they're going to think of, is gold and silver. It's the primary target of them. And when they see they're losing their purchasing power at 50% per month, or maybe not quite that high, but maybe high enough anyway, maybe 50% every quarter or something like that, they're going to say to themselves, hey, I got to get out of this stuff. I'm losing my fortune. Rich and poor, middle class, everybody is going to have the same idea. I got to get out of this stuff. And that's going to accelerate it. Accelerate it like you've never seen before. But at the same time, they're going to be chasing after gold and silver. It's all going to disappear. It's going to go poof. Have you ever seen a drop of water fall on the top of a really hot wood stove? It makes a quick sizzling sound and it's gone. That's what's going to happen to the gold and silver. You're not going to be able to buy any. And the people who have it, they're not going to want to sell it to you, not for dollars. If the dollar is losing, say, 20% or more of its purchasing power every month, and you had a whole bunch of dollars, say you were a millionaire, would you want to get out of it? Sure you would. And the people who have gold and silver, if it's going up the same amount the dollar's going down, and you're wanting to do that trade, are they going to want to trade to you for those worthless fiat currencies? Not unless they get enough to cover it. In other words, they're going to want more. They're not going to want to sell them. If they do buy it, they're going to make sure that they get several months ahead of the inflation. It's as simple as that. So what do? Well, the gold and silver, that's one of the big vulnerabilities, and this is the cryptocurrency's strength, is because when the gold and silver is all gone, and it's not going to be very long into this crisis, it's going to be in the initial stages of the crisis when the dollar still has purchasing power, and at that same time they're going to be printing more dollars like they've never printed them before. That's when all of the gold and silver is going to disappear. Is when the dollar still has considerable purchasing power left. By the time the dollar's becoming weak, the gold and silver is going to be all gone. But there's going to be tremendous amounts of dollars out there. Much more, as they create more and more and more of them on their way to zero. And all of the other fiat currencies with them. Then what happens? Now remember, there's only 3 avenues out of the fiat currencies. That is gold and silver and cryptocurrencies. So now they can't buy cryptocurrencies anymore, and the vast majority of that money is still out there chasing goods and services or commodities. It's going to start to pour into cryptocurrencies then at that point. But the majority of the money is going to be on the table at that point, because the gold and silver will be already gone, and the majority of the money is still there. It's going to drive all of its value into the only thing that's left to buy. And I've said this on my show before, and I've meant it, that if you're saving dollars to try to retire, you're going to be in a sad situation indeed. Your dollar's not going to buy anything. But I've said before, if you only need a very small bit of cryptocurrencies, and gold and silver too, you don't need an awful lot. At this point in time, it's going to be your greatest investment you've ever made in your life towards your retirement, because you cannot save enough dollars to retire. I don't care. It'll catch up with you. I don't care if you've saved $1 million right now to retire on. That ain't going to do you, because they're going to destroy the purchasing power of it. If you've saved $100 million, it's not going to do you. If you've saved $500 million, it's not going to do you. Because there's no end to how low it can go. It can go to zero, and 1,000,000 times zero is still zero. Whereas all of that wealth that the dollar represents, if people go out right now and they look at their house and they say that's worth so much dollars, ka-ching, it's worth X amount of dollars. They look at their car, it's worth X amount of dollars. What we're talking about here is a fundamental shift in what things are worth. Because they won't be able to go out and say it's worth so much dollars anymore. It's already getting difficult. I already see it. The front sides of this. Now, I've been talking about this for years. I went to the hardware store the other day, and a woman in there who's pricing items couldn't keep up. They can't keep up with their inventory, putting the little stickers on, price stickers on things. Because prices are moving upwards so fast that they can't keep up. They're falling behind. They have to, every day they have to go through and take the old stickers off and put new price stickers on everything. This is going to accelerate many times over. And people out there, they can't see it yet. But this is the time. This is still the early adopter phase of cryptocurrencies. And it's long in the tooth for this bear market for gold and silver. This is the time to get in on the ground floor. And this is not the time to lose your nerve if you're already invested in these things. Because I'm telling you guys, do not put your faith in dollars or any other fiat currencies. It doesn't matter whether it's Japanese yen, it's a Swiss franc, a Canadian dollar. There's no safe place coming. This is a firestorm that's coming. That's going to take out all of the fiat currencies. And it's going to happen very quickly when it finally gets fired up. And it's all timed on the Fed changing course and changing direction, which they're going to have to do. They cannot possibly stay on the charted course that they're on right now. The course that's supporting the dollar. If they could stay on this course, they can push this thing out further. And that's what they're doing right now, is pushing it out further. But as they stay on this charted course, they get deeper and deeper and deeper. And it gets more and more difficult for them as the days pass and as the market goes down. And as the cost of money, which is basically the debt market, goes up and climbs. There's limitations to how far they can let that go before they pivot. Very strong indicators and things in the credit markets that will not allow them to proceed any further than a certain point. But when they change direction this time and go back to easy monetary policy, it's game over. You've got to have your alternatives to the dollar, or you're going to get caught in this. And for people out there who are saying, oh, it's going to deflate. Yes, for a very short period in time, it's going to deflate. And we're on the verge of that happening. And these people out there who are deflationists are going to say, hey, we told you so. We told you this was coming. Look how good you've done by staying in the dollar. And yeah, that might be true for a very short period in time just before the Fed pivots. Because things are going to get worse right now before the Fed pivot. The economy is going to continue to roll downhill very rapidly and gain speed before the Fed pivot. We might even see either disinflation, which is more likely, or even possibly some moderate deflation before the Fed pivots. But trust me, they're going to pivot. So where do you want to be? Gold and silver in the real physical form is your best place to be. But coming in a tight second is cryptocurrencies. And amongst the cryptocurrencies, the best places to be is possibly Bitcoin or Ethereum, or the coins that are closest to those two. That's where you want to be. You want to have some, even if it's not much. You want to have some, because this is the direction it's all going to move in. We're going back to real money. This has been an experiment that they've done that's going to end terribly bad, and we're going back to real money. Real money, not currency, not debt-created money, but real money. That's what we're going back to. And you have no idea the value of real money. You go back before, like if you went back 600 or 800 years ago, or even sooner than that, you'd find that what an ounce of silver was worth, like the Romans, they had something called a denarius, which is a little silver coin exactly the size of a dime, which is 1/10 of an ounce of silver. And back in those days, they didn't work an 8-hour day. They worked a 12-hour day. And it was hard manual labor. A denarius was a day's work. So you get 10 days' work, 120 hours, man-hours of work for 1 ounce of silver. Now you just take the minimum wage of today and you multiply it times 120 on an hourly wage. What is that, something like $1,200 an ounce, I think? My math correct? And that's what silver was worth. Silver was always about 1/10 the price of gold, and per ounce too. Right now, it makes silver one of the best investments in the world. People don't see it that way because of this manipulation of these 4 big banks, because of what they've done. But soon they're going to see it that way again. But some people are ahead of the curve. Generally, it's the rich people that are ahead of the curve. Who do you think's draining the LBGA or London Bullion Exchange? I can't. Why is that acronym so hard for me right now? Anyway, listen, guys. Thank you for listening to my show. And I just think that now is the time that you got to get ahead of this thing, because if you wait until after the Fed pivots, you're going to have to pay an awful lot more for these things if you can get them at all. I'm talking about alternatives to the fiat currencies. Catch you guys in the next show. Bye-bye.